What's going on, everybody? My name is Zach Hartley and welcome back to another video. In this one, we are going to talk about the question of whether or not it is time to buy Drone Delivery Canada. The stock has been plummeting over the last 2 years and it is actually trading at the same price it was trading at about 6 years ago. And so in this video, I want to talk about the chart because we're seeing some big technical indications. I also want to talk about some recent press announcements. And then I want to talk about the valuation and talk about the price to sales and what you are buying when you actually get into this stock. And we're going to try and decide if whether or not right now is a good time to get in. So let's jump in. Okay, so first of all, they just put out a press release this morning, I believe it was. Yeah, this morning, and it was pretty exciting actually. They just announced a new deal. It's a new project. It's good for 6 months. It's worth $50,000. It's going to involve 26 flights here between 2 different hospitals, and they're going to be using the Canary drone. This is a great sort of test and a proof of concept of a flight happening between 2 different hospitals. And I think it's good momentum. It's a good contract. It's a small size, but it's kind of nice. The only problem and thing in the back of my head is that the 2 hospitals that they are flying in between are only really about a 17-minute drive apart. And so for $50,000 and 26 flights, is it worth it when they're that close together? I guess hopefully it is, or at least the hospitals have done the analysis and it sounds like it is, and hopefully we see more contracts like this in the future. But I did want to point that out because this distance was a little bit shorter than I thought it would be. But nonetheless, it's a nice contract. The company is at least going in the right direction. They're locking down some new customers and it's going well. It is not going to have a major impact on their revenue, though. Last quarter, the company did $175,000. Before that, they were in the 500s because they sold one of their Condor drones. And before that, they were in the 200,000s. And so $50,000 over 6 months is 25 grand a quarter. It's going to make up, what is that? Maybe 15% of their revenue. Maybe a little bit less, probably a little bit less. And so it's a nice contract. It's not going to totally move the needle though, and it definitely hasn't moved the needle a whole lot on the stock chart. As you can see, we're basically even on the day at 23.5 cents. Not a whole lot happening. Volume is also pretty low, and we're in a pretty clear bearish trend. But the reason I want to point this out to you right now is because we're at 23.5 cents, and the last time we came down this low, we bounced off of 23 cents, and we also bounced off 21 cents back at the end of 2022, right before we turned into 2023. And so we are at a very, very crucial level with Drone Delivery Canada. We haven't seen the price in this 21 to 23 cent range in about 6 years. And so this could be an opportunity. The reason I'm bringing this up is because every company is attractive at a certain price. And this is the lowest price that we have seen for this stock in a very long time. And so I think it's pretty exciting. I am watching this one very closely. If we come down and we test 21, then I'm probably going to be a buyer as soon as we can start to see some volume pick up, probably see it flatten out a little bit, and the start of a new bullish trend. That's what I am looking for. But I'm giving you this video because I'm watching this one right now. I want to give it to you early because hopefully we see the bounce off support there. But it could go either way. It could drop down further. And honestly, over the long term, it will probably represent a good buying opportunity. But this company is just tough to value, and I'm going to explain that in 1 minute. First, I want to talk about the other announcement they have put out since their recent financials and since my last video. DDC announces the restart of the heavy lift Condor drone ISC contract. This is the contract that they have with the government of Canada. It could be worth up to $1.2 million is how they describe it, with a value up to approximately $1.2 million with the Canadian government's Innovative Solutions Canada program. And so that's how they describe it. That would move the needle. That is a big contract, especially if all that revenue comes in. But realistically, it sounds like this also is a test for larger contracts, because at the end of this press release, they say that once in the pathway to commercialization, the program allows for any Canadian government entity to purchase an unlimited number of Condor contracts with an individual contract value of up to $8 million. So that is very exciting. This again seems like kind of a test for larger contracts, and so it's all about timing and making sure the company has enough runway to actually support the operations. And so this is exciting because if both of these went really well, I think it would give a very bright future for the company in the long term. But as of right now, the valuation is still a little bit tricky. This is a roughly $54 million company. I got different numbers on Yahoo Finance, and then I checked Stock Unlock. They're within $2 or $3 million of each other, but I don't know the exact number right now. They also have about $1.23 million in trailing 12-month revenue. They do have a healthy balance sheet right now. They have lots more assets than they do have liabilities, but they are burning through cash, going through between $2 and $3 million per quarter. And so that gives them roughly 1 year's worth of runway. It could be longer, it could be shorter. It just depends on how they spend their money. But in the next 1 to 2 years, they are going to have to probably raise money unless their revenue just skyrockets. And so that is something to keep in mind. They also had 2 announcements lately, the 2 contracts that I just went through in this video. Both of them are pretty good. They are going to need more than that to get to profitability though. So we got a long ways ahead. And in this company, you have to kind of understand that we've got just over $1 million in revenue, but it's a $54 million company. And so you're not buying earnings here. This company doesn't generate any profit. And you're not buying a whole lot of sales here. What you are buying here is the technology that they have developed, the 3 different drones, and the infrastructure behind it. And you're buying into the potential of that infrastructure and those drones in the future. And so it's a tricky company to value because there's no earnings for a price to earnings ratio, and the price to sales ratio is like 40 or 45. So when you compare what you're paying for the company to the sales that you're getting out of it, that's a very, very high ratio, pretty much no matter where you go. And so it's a tricky valuation right now. It is still arguably an expensive company even at these prices. However, there is huge potential here. If any of these contracts really blow up, or if they can get contracts like this in the US, there's a huge opportunity there. But it all comes down to execution now, and it all comes down to whether or not they can take these projects and scale them up. And so it's a risky one. There's no doubt about it. This is a risky penny stock, but I'm starting to feel like at these 21 to 23 cent levels, even 20 cents, it's a reasonable level to get in, considering it's at like 6-year lows, considering the potential that they have, and considering at least they're starting to really gain some traction. And so I am watching it closely. Here are my final thoughts though. Number 1, stock price is coming down to an attractive level from a technical perspective. That's what I went through here. We got a double bottom at 23. We got support at 21. I'm watching that level very closely. The fundamental valuation, like I explained though, is still a very difficult thing to do, and the lower stock price also makes it harder for them to raise money. So that is something to also consider, is that if this company, let's say in the back of Steve's mind, he goes, we've got a year's worth of runway, I need to raise money in the next 3 to 6 months. Well, they might be very motivated to put out announcements and to get some of these deals pushed through so that they can get people excited about the stock, raise the price back up, and it makes it a little bit easier to raise money. And so that might also be something that's going to come into play here in the next 3 to 6 months. It doesn't feel like Steve is spending a lot of money on marketing and investor relations right now, which is good, which is actually what I like to see. But it's going to be interesting how he handles that going into what could possibly be a fundraise in the next 1 to 2 years. And so, again, this is all just my opinion though. Who knows if they're going to have to raise money? Who knows what their actual runway is going to be? You can do your own due diligence and try to figure that out for yourself. This is all just sort of what I'm gathering and what I'm gaining, but I am watching the stock chart very closely. I like the stock chart right now. I like the company over the long term. Now it just comes down to, can they execute and can they put some revenue on the board? So that is my opinion. Thank you guys so much for watching. We'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.